What's up, traders and investors? Is it time to start looking at EV stocks again? I know no one's really talking about that right now because the time to be interested in EV stocks was way back in the ancient times of 2020 and 2021 when the market was ripping higher. I'm going to give you the opportunities that I think I see towards the end of the video, but you're going to have to wait for a second because we need to talk about market psychology around IPOs and bull markets first to get people's thinking aligned correctly. That's my goal is to make people think differently about trading and investing, at least differently than what a lot of people were doing over the last 2 years. Now, if you're already in some EV stocks and you believe in the companies, then just keep on holding on as you plan to do 2 years ago. But let's be honest. Let's be honest. I know that when people bought these EV stocks, they had no plan for them to really come down this far, even if they were a long term 10-year bet. I hear that all the time. Oh, I'm in it for 10 years. I'm in it for 10 years. But that means you're going to have to take some drawdown. So let's talk about IPOs for just a second. I promise we'll get to the EV stocks in a moment. Have you noticed something interesting about the IPOs this year, 2022? That's right. There haven't been any, at least none that have been nearly as hyped as 2020 and 2021. And there's good reason for that. The people that take these companies public, the big institutions, the people that do all the work, the legwork of getting the initial capital investors, the venture capitalists, the angel investors, the early people in the rounds of funding, they don't take a company public for your benefit. They take it public for the early people's benefit. And they're going to choose strategically when to have these IPOs. 2020, coming off the pandemic, we in the stock market made a new all-time high by about summertime. So the fall of 2020 was a great time. Tons of optimism, tons of cheap money for people to take out credit and buy these stocks. 2021 followed, and every single month of 2021 had a new all-time high in the S&P 500. Bet you didn't know that. I did the math myself. And so those were the times where people were really energetic about these EV stocks because the Democrats in the United States had taken power and they were very, very bullish on a green revolution. Everything made sense. The narrative was there. The problem is a lot of these companies, Nikola, Rivian, Neo, Lucid, they didn't make any money yet. And so it was all based on speculation. Well, now we come to this point in time where, in hindsight, it all seems rather obvious that maybe those IPOs, maybe those initial valuations, what people were speculating on was a little frothy. And to be fair, I've talked to a lot of people that are very, very big on EV. They realize this is the future. And when I tell them, like this week, like, hey, EV's starting to get kind of interesting, they're like, well, I don't know if I want to or not. What I don't understand is why people would be interested in a stock that was at, say, 40, $50 and buy it there, but not be interested when it's at half that or even less. You're literally getting it cheaper. Well, the reason is market psychology. And that's why I'm making this speech. You have to think differently. The first thing you have to do, and this is a teachable moment the last 2 years, is avoid that speculative hype. It's easy to get wrapped up in it. I'm not saying that I haven't got wrapped up in the past, but I do have a certain way that I look to play IPOs, and I promise that will come in a video soon. But you have to remove yourself from that and realize that this kind of arc of market history that we've gone through is very, very common. Now, when all the chatter has died down, when all the enthusiasm is no more, now you should start getting really, really interested to deploy capital in these long term bets. Look, they could keep going down, but it's a far better prospect now when no one else is talking about them than it was when they were the next thing literally since sliced bread. That's my general thesis about market psychology and how to avoid the FOMO, fear of missing out speculation. Because look, if you would have bought Amazon at $100 at the top of the dot com boom or at $5 when it crashed, either way, you'd be in good shape now. But there was no reason for you to jump in at that top there. There was plenty of years to get in and make really good returns, even in the last few years. So don't FOMO. But now that the people that have FOMO'd are no longer looking at it, if you're wise, you can start looking for opportunity. Let's look at a few that I'm noticing this week. So, of course, Tesla is numero uno. This is the staple. And Tesla had an interesting pullback level that I've talked about in past videos that it hit in December. Well, it messed around in the last few weeks, but now in this recent rally off the invasion of Ukraine, which you got to think, why would the invasion of Ukraine make the price of Tesla go down? It's one of those fear events that you got to look for that happen maybe once a year, maybe sometimes even once a decade or once a lifetime, that push the market into levels that it really has no reason to go. Keep that in mind. So now, like I look at in all things, Tesla is starting to do a potential pullback to this again around 900 level, which I still find is very significant. It was a past all-time high. It held the level in December, and it's going to be around the 50% retracement of this recent rally. I don't know if it'll get there, but I'm going to get really, really interested for a lower time frame setup because I'm a trader. I'm looking for these lower time frame setups to take low risk entries to enter into long term positions. Well, let's look at a few of those. So let's take a look at Ford. Ford. Ford sells gas cars. Yes, they do. But they also are becoming a major player in the EV space. Ford has had a little fall from grace this year, but it's coming to a level that I'm really interested in. So, from the pandemic low, which is an all important low for lots and lots of stocks, up to the all time, no, it's probably not all time high, excuse me. We'll call it the high of 2587. Ford has pulled back now, as of last week, to 1492. Let's call it 15. Now, what's even better is if we go down to the day trading level, the 30-minute time frame, this is where I like to find the low risk entries to play the longer term setups. We have a little reaction. Like what I like to do is I first like to wait for price. As you can see, I draw up my level. That's the weekly level, 1492. It came all the way down from the high down to here, and then it pinged it, set off an alert, which I've set in TradingView, or you can do it in Seeking Alpha. And then I'm going to wait to see what price does at that level. It punched below it, but we had this rise here on April 7th and April 8th. Okay, Thursday and Friday of last week, that was the key price action. Now, if you haven't been paying attention this week, the stock market's been going down, pretty volatile, but Ford has been going up. And so, what I would like to do, let's go back in time and take a look before that open on this Monday, April the 11th. I'm going to look for a 50% inside of this move itself, 50% inside of a 50. I love doing that. And what this lets me do is it lets me set up a potential position. We're going to buy it on that 50% level, which just happens to match up with our wider level. And I'm going to give it a little bit of risk. This is just day trading, swing trading type risk with the plan to get it to a longer term position. just below that low. In other words, if it breaks the low from April 7th, I'm going to call that thing over. But it lets me take this back up to maybe getting back in this range right here. And I can have a 3-to-1 trade that I can either let it get to there and take some profit, or let the whole thing ride, or a mixture of both. Take off some profit, take a little bit of short term capital gains on it, and then let the rest ride as long term capital gains. And so I've noticed that Ford pinged its level and is holding above it. Now, this video may come out about 2 days after I'm making it, so anything can happen. We'll see where it is in a few days, but right now, Ford is actually showing some signs of holding a support level. Here's another one. Neo. Who remembers Neo? So Neo has come to a very interesting level. I don't just look at 50% levels. I look at other levels that sort of become self-fulfilling prophecies. And this is why I started off talking about IPOs, because a lot of people I know back, well, this is actually before 2020, but Neo debuted in September of 2018. And a lot of people, I'm sure, bought into it only to have it fall, oof, almost 85% from where they bought it. That's why I don't play IPOs. Well, I actually do play IPOs, but I'll show you in another video what I like to look for. But here's the thing that's interesting about this. If we look at the high of that IPO from way back in September, there was a little bit of respect for it here as a resistance, and that actually launched this trend of fall of 2020 when we had all that EV hype from that level. But now we've returned. And I sort of have a little history with Neo because on my past social media postings, I was shorting it up in here, up around November and in January, and much to the anger of a lot of the fanboys of this stock. I apologize if you think that I caused you to lose money. I just read price action. The reality is, these things all have a tendency to come back. These parabolic moves, they don't go on forever. And oftentimes they do this. They come right back where they started. And that's why I've just seen a lot of these. I've seen a lot of these over the years, and it doesn't make me FOMO. I don't fear missing out because they come back. They oftentimes come back. Well, they have. It's come back to this 1380 level, which was the high of the IPO. And it's done something that I like to look for. And if you watch my videos, you know what it is. On this little earnings run up, looks like they had earnings on March the 24th. Of course, like everything else, I'm going to chart it, and I'm going to look at this trend right here. This is the reaction off that support level, the reaction level. And then yesterday, Monday, April the 11th, Neo hit that level, and we have a potential response to the level. Again, we can look to take a trade off that level with our stop below that low, because if it breaks it, it's breaking that support. We want it to hold there. Look for a 3-to-1. If we want to be a little more aggressive, what we can do is we can say, okay, from the all-time high down to here, then 40. 40 is my target. And we look for, one second. We look for 40 to be the target there. And we can size our risk reward accordingly. And that can be our entry on Neo. So just to summarize, anything can happen. But what really gets me excited is that nobody else is excited about these. Most people have given up on EV stocks for now. They don't want to add to their positions because they're bag holding. I am coming in with a clear head and also a willingness to get out if I'm wrong. That being said, I'm starting to see some reverberations in the EV market. I know that this week, in the last few weeks, the whole last quarter, have been very nervous, very, very nervous for a lot of investors. But you know what? I'd rather you be taking risk when everyone else is nervous than in a market like 2020 and 2021 when it's ripping higher and everyone's thrown caution to the wind. That's just what I want everyone to do to trade wisely. So, hope this helps. We'll see you in the next video.